why did they choose gold? Why did they not choose special drawing rights from the International Monetary Fund or a euro or a yen or any other currency or vehicle? Why choose gold after almost 80 years?
Major events seem to keep evolving and transpiring in the financial world and in the metals world. And a lot of these events that you have been warning us about and others that we've interviewed have told us are on the roadmap. These are going to be signposts that we're going to pass along the way to the destruction of the fiat currency, the adoption of precious metals and by masses of people as the last remaining asset class, and the world pivoting away from the U.S. dollar as the world reserve currency. All of these things that you've been talking about have been happening at an accelerating pace. You've talked to us about those multiple times, but it would be good to summarize some of those key points and things that are actually happening right now, transpiring right now, that we're getting correlation from officialdom that are actually happening. I guess I can kick us off with one, and that is that we've seen action just in the last week to 2 weeks of Russia, among other countries, taking specific actions to become less dependent on participation in the Western dominated SWIFT system, the U.S. dollar as the world reserve currency, etc. Could you tell us about how you saw that coming, about the global pivot away from the dollar and its singular role as world reserve currency, and the specific evidences we're seeing right now of that? And then there's some more that are right on the heels of that are happening also.
Yeah, look, a lot of the things that we've seen, quite frankly, I don't know how more commentators didn't jump all over it and didn't notice it. And, taking a slight journey back in time and talking about the things that we've talked about for a long time, if you take a look at them now in retrospect, well, they really start to make sense. Going back to 2017, when the Bundesbank told the New York Fed, give us back our gold. And within a few months of that happening, the Bank of Austria, the Dutch National Bank, Bank of Poland, Turkey, and many others requested their gold back from the Bank of England and the New York Fed. And so repatriation of gold at a time when, for the entire 6 years leading up to 2017, we were in the midst of a bear market, of a market that no one was buying precious metals. They were buying cryptocurrencies and Dow stocks. And all of a sudden, the banks say, send us back our gold. In 2018, those same banks bought more gold as a group than they did in the previous 60 years combined. At this point, ding, 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 ding is starting to go off in my head. Why are the banks repatriating their gold? Why all of a sudden are they buying it? And then, of course, in 2019, the single biggest event of my career up to that point, the reclassification of gold as a Tier 1 reserve asset. I saw Naomi Prince, I think I'm saying her name correctly, just wrote about this today. And it brought my mind back to, gosh, we were talking about that in 2019, where that reclassification of gold as a Tier 1 reserve asset, the only other one in the world next to U.S. dollars and treasuries, a riskless asset as far as central banks are concerned, should have sent the bells ringing for everyone. That why did they choose gold? Why did they not choose special drawing rights from the International Monetary Fund or a euro or a yen or any other currency or vehicle? Why choose gold after almost 80 years of it just being dollars and treasuries as a Tier 1 reserve asset? We moved to 2020. We see more warning signs. We see the IMF, which is 190 countries from around the world, saying we want a new Bretton Woods. How do people not see that? Gold's reclassified. The banks are recalling it. They're purchasing it. And then 190 countries say we want a new Bretton Woods. The Chinese Belt Road Initiative, number 2 huge event in my career. How do people not think that this is a big deal? Of course, the lack of media coverage is enough. Most people you meet on the street have no idea what the Belt Road Initiative is, yet it is connecting 75% of human population between Asia and Africa. 3 out of 4 people on the planet will be using a new Chinese digital yuan, settling contracts from everything from infrastructure to settlement and energy outside the U.S. dollar. You had this World Bank and Klaus Schwab come out of nowhere saying we want a great reset, and I'll get to that in a minute. But that at the time seemed foolish. It doesn't seem so foolish anymore. And you saw the rise of the managed money others, as they're called, on the COMEX traders take 300 million ounces of silver off the COMEX market in 2020 and a whopping 825 metric tons of gold off the market in 2020. That's 10 years worth of deliveries off the COMEX market. The trend continues to accelerate. And of course, we talked about in our last interview, we talked about how the amount of money creation kept going on and on and on. And by 2021, we were talking how 50% of every dollar ever created had been done so in the past year and a half. Those numbers have increased to 80% right now, with massive inflation continuing. And when we looked at the events surrounding the withdrawal of Afghanistan and the Russians declaring protection or a joint military cooperation agreement with Saudi Arabia and Nigeria, if that didn't send the alarm bells off, I don't know what did. And we talked about that ad nauseum in September over and over and over again. And what do we find now? Nigeria and Saudi Arabia will be selling their oil to Russia for yuan. But remember, all of these yuan payments, whether it be Saudi Arabia selling to China, whether it be Nigeria selling to China, whether it be Russia selling their oil, their gas, and their coal to China for yuan, all of these yuan-denominated payments are also convertible into gold on the Shanghai Gold Exchange. You're seeing massive gold accumulation by the central banks and repatriation by the central banks, and a trend that's gone on now since 2017. And so what we are seeing on a very, very large scale is de-dollarization. And there's a part of me that wonders, in the recesses of my mind, was this planned? Do they want to create an environment via weaponizing of the dollar? First telling their cohorts in the central bank community that there will be a day of reckoning. We're going to reclassify gold. So start getting your gold home and start buying it. We're going to continue to manipulate the price to run cover for you all to de-dollarize and reposition into gold. And then we are going to weaponize the dollar and push people into finding alternatives. Look at what we've done by weaponizing the dollar and pushing the Russians into the open arms of the Chinese and their SIP system, the cross-interbank payment system. You have really incentivized people around the world who are wondering, are they the next person to face sanctions? Are they the next persons to be kicked out of SWIFT? To find alternatives. And when you realize that all of this money was created in the past few years, a good majority of it has found its way into financial assets. Ludwig von Mises would call this the crack-up boom, where a massive expansion in capital, or in credit rather, creates misallocations of resources and of investment, creating distortions, creating anomalies in price, where price discovery becomes impossible. And all of the assets in this country are inversely correlated to a rise in interest rates. On the other hand, you have the Federal Reserve claiming they're going to get tough on inflation. No, they're really not. They're not going to get tough on inflation. If they were, they would have stopped adding to their balance sheet after they admitted that inflation was transitory. They wouldn't wait until the next meeting in 45 days to start selling off what they say is going to be, $1 billion a month in mortgage-backed securities and government treasuries. They would start raising rates now, and not by a half a basis or 50 basis points, but by 2 or 3%, 200 or 300 basis points. When you see today's clip of almost 9% inflation on the CPI, these numbers are getting out of control. And I think that what you are witnessing is a massive form of de-dollarization. But could it be that it was planned? Could it be that they realized we've gotten so far down the road with $100+ trillion in funded and unfunded liabilities with the inability to ever pay it back, to incentivize a mass de-dollarization, to incentivize energy to be settled in other currencies, to create this mass de-dollarization, which spikes interest rates immediately and plummets the value of the dollar as all of those dollars come home. See, there's more dollars outside the U.S. than there is inside the U.S., as every country has to own dollars to buy oil. But if that changes, and now you can buy oil with yuan or with ruble or with euro or with local currencies, all these dollars come flooding home. We blame the Russians and the Chinese. We are no longer the scapegoat for creating the problem, just like Putin is being blamed for high energy costs. Yet if you look at it, prior to this happening, you had oil up, 50, 60%, and natural gas way up. The energy prices were way up before the war in Ukraine happened. But now you have a villain. When everything collapses and interest rates spike and the dollar comes home, everything inversely correlated to a rise in interest rates, stocks, bonds, and real estate collapse, and so does the dollar as it's being globally forsaken. There's your great reset that Klaus Schwab talked about. Could it happen? I don't know. I mean, it sure seems like it's a possibility if the dollar was forsaken to that degree. And it seems by the weaponizing of the dollar and all of the pieces that have been put into place along the way, that indeed that indeed this is exactly what is happening. And you take a look at something like the nickel market, where 120,000 ton nickel short position brought the LME to its knees, which represented like 1.2% of the global mine supply. Just a short position on COMEX alone in silver represents about 10 times that, let alone the OTC position. You're talking nickel position on steroids. And is it because the government just won't let the price of gold and silver take off because it is the canary in the mine shaft? I'm not quite sure. People who are frustrated about price not behaving with all of these things happening just need to have patience, because it's going to be one of those moments where we wake up to a new reality on a Friday night, it happens, or on a Monday morning, we wake up to a new reality where the dollar is no longer the single world reserve currency. Heck, even our Fed chairman came out a month ago and said there is room for more than one world reserve currency. He's acquiescing to this reality. The progression of events that we've been talking about ad nauseum, really for the past 2 years, is happening with greater veracity and greater speed. And when you then bring it home to our side of the table, there's a debate. Is there plenty of silver out there, or is it just the inability for the refineries to keep up with the demand? I'll just simply say this. I am beginning to think that there isn't plenty of silver out there. Yes, there is a logjam in refinery, but if every single day and for 2 years straight, the demand is outstripping the supply that the refiners can keep up with, all roads lead to the same place, and that is a market that is beginning to lose the ability to keep up with demand, ultimately ending in more demand than there is supply, whether it be refining or just actual supply, at an asset that is continuing to lose ground in terms of its ratio to gold in real terms at 7-to-1, meaning 7 ounces of silver for every 1 ounce of gold. That's under half of what it had been for 5,000 years. It's 6 times what its average was for the last 150 years. It's depleting. And it's duality in demand, in industry and in monetary demand globally, when the world has awoken to inflation, not just here in the U.S., but everywhere, and to fascist governments and to edicts that can lock you out of a system. People are waking up. I would argue that there is a tightness in refinery capability, but I would also argue that there is far more demand than there ever is. And I think it's just a real easy, convenient way to say that the refineries can't keep up. When I look at my inventory and see 4, 5, 6 weeks out on sovereign mint coins, to me, that is not refinery capability. These governments, when you look at these governments, the only thing that they do that's profitable is sell gold and silver. I mean, to a degree. I mean, it's one of the most profit center driven areas of the entire U.S. government, and yet they can't keep up with demand, nor can any of the other mints. I don't know, Dunnigan. I just see a trend that's continuing where the biggest money in the world has been using the misdirection, another thing we've talked about for a long time, of holding down the paper price on COMEX, running cover for the bullion banks to do it at their behest, and allowing their cohorts, the central banks, to pickpocket the world, reposition, de-dollarize, and we're going to wake up one morning, if I had to bet, to a new reality where the dollar is challenged for its singular world reserve status. And then you will understand what supply chain problems really are. Then you will understand what price inflation really is as the dollar is dumped and interest rates spike and there's a leveling of the playing field as all of these asset classes come pummeling down. That's when you see gating in money markets, as we've talked about before. That's when you see bail-ins with banks, as we've talked about before. Try to get a hold of Fidelity when the house is on fire to get out of your position. The proactive nature of what we are talking about is massively important. And all of the supply chain and shortages that I've been talking about, they haven't been today, but every day it only reinforces my feeling that it will be the defining factor in this industry. It has never been harder for me to get coins. In fact, it's almost discouraging for me at sometimes when I look at the inventory and realize, yeah, I can get the stuff supposedly in 6 weeks, but is that really what someone wants to hear when they call with $100,000 to protect their family? Sure, I'll take your money, but you're not going to get your stuff into June. Is that what somebody wants to hear? No, it's not. So the linear progression of events that I started talking to you about, that I saw happen in 2017, starting with the German Bundesbank out of nowhere repatriating their gold, and all the way up to now to the Belt Road Initiative, to Saudi Arabia diverging away from its petrodollar promise. These are all massive signposts on the road to a destination that is not just paved with U.S. dollars. And I think that's something people need to understand. Whether or not they buy gold or silver or listen to what I'm saying, I will simply say this. If you own nothing but dollars and dollar-based investments, when this switch is flipped, you are destined to go broke, period. And if you don't think interest rates will ever rise, then stay where you are. Stay in your real estate investments, stay in your stocks, stay in your bonds. But do realize this, that if they do rise, and I think it's not going to be the Fed and their lame 50 basis point threat of raising. I mean, what good does 2.5%, 3.5% interest do when you have inflation 3 times that? And if you use the real measurement inflation 5 or 6 times that, it does nothing. It's spitting in the ocean. But when the market says, you know what, we're sick and tired of a country that is debasing their currency, that is weaponizing their currency, that is telling the world how to live, and they are hypocritical in the way they do things. Let's go our own way. When we see gold reclassified as a tier 1 reserve, when we see the dollar losing its petro reserve status, when we see our Fed chairman say there's room for more than one reserve currency, if you don't start to mitigate your exposure to the dollar in any way, I think you are making a generational mistake.